Okay, everyone. Let me just make sure this is working. Perfect. All right, welcome, everyone, anyone, and everyone, to the first 2022 edition of the weekend live stream. Again, if you guys are new here at all, what I do is once a week, maybe more coming in the new year, depending on your guys' feedback. We go live, talk about charts, talk about the markets, go over equity markets, FX markets, crypto especially, and just try to figure out what's going to go on and happen next week. This one might be a little bit of a longer one just because I'm going to go through a lot of charts. We've got monthly candles, we've got weekly candles, we technically have yearly candles, but I don't really look at those. We have a lot of action to go through. As always, this is kind of a preview for what the Stats Edge Pro members get each and every day. Not a live stream, but actually what I do is I take all of the data that you're going to see me go through and I kind of combine that into a little blog post, a little write-up. I'll actually show you guys an example here in a minute of kind of what the end result looks like, and it's just basically my thoughts of the market. The point of it is it's not a signal service, not an alert service. I don't believe in those, but it is going to be a way to help you build your own trading plan, understand how a market technician and a quant looks at the market in hopes that you can start to kind of get that as well. Just making sure all the chat and everything's kind of lined up correctly, and I'm not going to be showing something that I shouldn't, but we're going to do a bit of a plug right off the bat, and then we'll get into it, main page, and then we'll do this. So, pop that over there, and then we hit this button. Perfect. So yeah, so this is the Stats Edge Pro. If you choose sign up, again, it's $2 a day, no commitment, more than a month. You get access to all of my scans with Trade Ideas and Trend Spider. We have a little chat room. Again, this is not something that I'm going to be in there all day, every day, telling people what to do. Again, I don't really believe in that. Personally, I believe everyone should trade their own trading plan. So my, goal is to guide that. We have a many hours, sometimes 2 or 3 hour long Q&A webinar that we do once a month, and you can check out all the past webinars there. And then we have the nighttime watch list. So basically what I'm doing today is what I do every day. This is the one for the 31st. Just pick one, top one here. And then I go through and I kind of say, hey, this is what I'm thinking about the crypto markets, as what I'm thinking about the equity markets. Here's some stocks that I'm watching, and then give you this link to a Google Doc, and then that Google Doc has access to kind of what my watch list is each and every day. So that's what I'll be building today, and that's what I do each night for that. Just get that out of the way. So first, before we get into the market, I see some people already talking about the shorts I made last week. So that's what I like to do first, is just wrap up what I've done in the last week. Then we look at the markets for not just a week, but we're going to look at it more for kind of the last year and the last month and the last week, and go from there. Oh, there's something that popped up here that I just have to change real quick. Let's edit this and just make that private. I tried a new streaming software. I'm sorry, I'm a little confuddled. But yeah, I tried a new streaming software that I bought called Ecamm that's supposed to be built for these M1 Macs, and got really confused. And when I hit live, it went live on another thing, and it was just a bit of a nightmare. So I got to learn that. So yeah, so the two from last week was UEC. Basically what I was looking for on this one. It's been so long. How do I Oh, where's my presenter? There it is. So yeah, so I was looking for it to kind of break out that area. Got a nice pop out of it. You know, if you're buying a $3 stock or $3.50 stock, and it almost goes to $4, and you don't take any profits, I think you're kind of doing it wrong, right? We're not trying to get things to go to a million every time. Just try to take a quick hit. And yeah, it's pulling back down. So I actually may look to re-enter this one if it starts to bounce, but I'm not going to be too interested below that level. It did what I thought it would do, just didn't hold up very well. And then the other one was Docs. Nothing really occurred yet in Docs. We had a little bit of a break, but I'm really looking for it to kind of clear that level before I get involved in this one. Just the way that I'm looking at it personally. Damn, I'm doing it wrong then. Yeah, take your money when you have it, right? A lot of people, they want to buy stuff and hold it for years, right? They need to make $1 million on every trade, and it's just not. Get your money, take some out right away, maybe hold a bit to see if you get a good move out of it. But I'm one that I usually pretty quickly take some of the position off, whether that's 2/3 or 1/3 or whatever your trading plan is. But I just want to put some into my pocket, and then I usually raise up my stop, and then on to the next one. If that one continues, then you've got some of the position left, and if it reverses like UEC did, then that's fine, you're out. But that's pretty much all I did for that this week. Let's go into crypto right away. We'll talk about, so I go crypto, FX, equity markets as a whole, and then we're going to go into individual equities. So we are going to go out all the way to a monthly chart for not all of these, but for the big ones. And I'm actually just going to, let's do sidebar, add remove widgets. Let's make that a wide sidebar. I don't know. Let's just put some stuff here. Watch list and scanner. I don't care about news or anything. There we go. Just to offset it so my face isn't in the way there. So if we look at the main cryptos, BTC, for the monthly charts, just to kind of get a handle on it, let's actually just do holdings and Bitcoin, right? Because I always like to go back, take a look at a monthly chart, kind of get a good feel of what everything looks like. I find even if you're a day trader or myself, who's kind of a short-term swing trader, I hold for a week to maybe a month. The position has to be going well in my favor for me to hold any longer than that. I still like to zoom out, and this is something I got from JC at All Star Charts, the importance of just zooming out and making sure that you're seeing kind of the entire landscape. And kind of looks like we could be forming a double top here on this particular market. Let's go through and do that. All right, and then we've got this possible ascending wedge here. So all in all, good year, right? If we go to the beginning, January 2021 was, oh no, I guess technically not a good year. Nothing really happened all year. So I think it maybe have lost a bit of money on the year. Again, is why it's important to zoom out. But this has been kind of a choppy mess. So what I would look for, I think the trade here is pretty obvious. If you're under 65,000 on Bitcoin, there is no real reason to be aggressively long on this name. I think it may have gotten to the point where, I guess, which is just a bit of a rant, but everyone said, okay, once institutional money gets involved in Bitcoin, this thing's going to go to the moon. It'll be crazy. I'm kind of the opposite, and I think as soon as institutional money got in, I have some stuff that I can't really go too deep in that I do with Bitcoin when it comes to market making and trading and things like that. I think the more institutions get involved, the less actually potential growth there is. Because a individual might be fine buying Bitcoin at $100 and holding it to 50,000. and be happy with that. If you're a large institution and you got in at 40,000 and it goes to 100,000, you're going to be taking large quantities of that off the table because you're going to have to, right? Because a lot of these funds are going to they're balanced funds, right? So 50% stocks, 40% bonds, and 10% Bitcoin or something. So as that percentage increases and you get more and more percentage of your portfolio in Bitcoin, just because the market's going up, you have to, by design of I'm missing the word, your covenants, prospectus. By design of your prospectus, you have to sell some out. So I think, not saying that it can't go, right? Because the equity market has a lot of institutional ownership and that goes well. But I think these, like, it going up thousands and thousands of percent each year, I think might be done on Bitcoin. That being said, from just a technical point of view, we're obviously putting in just a little bit of a double top here. So if this double top is violated and we push higher, then we're back on bull mode. Until then, we've had a digestion year, maybe a correction year coming. I don't know. I'm not going to obviously predict a year in advance. I don't think there's any advantage to that. If we go into the weekly chart, zoom in a little bit, we see pretty much the same picture. We have this resistance up here, and then we have this support down here. The notes I've been making for the Stats Edge people for a while is from a longer term point of view. It's, you're in a range. So there's not really much to add. So I'll actually just put massive yearly range. Right, you're in a range. So there's really nothing to say other than that. You've got a high end of the range, you got a low end of the range. Unless you want to play that range, I don't think it makes sense to be aggressively bullish until you get over the highs, and I don't think it makes sense to be aggressively bearish until you get under the lows. So you're kind of chopping there. And then from a daily point of view, and this is what I'm going to do with a lot of the charts, we have to watch this near-term support level. And I've had this note here for a while. We bounced off it and then aggressively crashed down into it. Again, I think, just hyperbole, because I'll trade the chart whatever happens, is that, again, the Bitcoin going from 100 to 10,000 in a year is probably over. It's gotten too big, it's gotten too noticeable, and too many people are involved that I think you're probably going to have it a little bit more like a volatile equity market where things that are, it's going to be a little bit more choppy, essentially, is kind of what I'm thinking here. Which again doesn't mean anything. Doesn't mean it's a wrong thing to trade or anything. It just means be a bit careful. Let's go do the same thing. I'm going to do the same thing with Ether. And then we'll go through the names on a shorter term basis. Let's go into the monthly chart on Ether. And this one looks a little bit more bullish to me, right? Where you've got this kind of uptrending channel going on, as opposed to, which we may actually be breaking out of that channel, breaking down out of it, as opposed to Bitcoin that had a pretty prevalent double top that needed to be hammered. This one seems to be just rising. So of the two, I'm just going to put ETH stronger than. But as we zoom in, you'll notice that there are some patterns that we have to look at on Ethereum. And it's crazy when you look at these numbers on the side when you're on such a longer term chart, right? This is $1 and this is 3,000. So when I say, we may pull back, if we pull back to 1,000 to test this prior high, that's still, from here, that's getting killed. But from, 2020, you're still up tenfold, right? So you always have to consider the volatility of these things. Now, let's remove all these. And I cheated a little bit before I got on here and looked at some of these. But we have this nice looking kind of declining wedge here on the weekly chart, where you can see we're getting tighter and tighter. Things are getting kind of consolidated here. and we're technically still holding above or near these prior levels here. So I think it's this button. Yeah. Right. So you see that high here and then that high here. That may be acting as support here. So that's kind of what I'm watching on the weekly chart of Ethereum, where, it's holding for now. If we get a pop from here, then I think this thing could take another move. One thing I've noticed this year in crypto, it's almost like it was the decoupling of these names, where it's not Bitcoin is up, therefore the rest of crypto is up, and it's not Bitcoin is down, therefore the rest of crypto it's down. It's more of they're individual tokens that do individual things, and they have their own cycles, which for us as traders is great. If you're a crypto maximalist where you just think you're going to buy it and you're going to, now's the time to buy it and I'm just going to become a crypto millionaire now. Again, I think you may have missed that boat on the major coins, but again, for us traders who just want individual names to trade, I think it's a fine thing. And then on the daily chart, you'll see that declining wedge a little bit more pronounced on the daily chart, which these types of patterns I really like. We'll go and actually just draw that out from this high down to that high, and then connect these lows, right? You can see that kind of declining wedge. So if, Ethereum can kind of break through, say, 4,000 and go, then there might be a bit of a bull flag, right? You have this nice strong push up and then this declining wedge. So maybe on Ethereum, we've got something on the go. And with that, we will go into the other chart. So again, the format of this for people who are new, again, if you are new, welcome. We basically go through what I looked at or what I shared that I looked at last week, which we've done. I go through crypto, which we're doing now, and then into the FX, the equity markets, and then we're going to try to scan for some stocks for next week. And at that point, feel free to always ask questions. But at that point, I will actually do chart reviews. So if you have a name that you're interested in having me look at, I'll look at. Again, none of this, of course, is investment advice. I'm just some dude on the internet. But if you want this random dude on the internet's opinion, you can go right ahead on that. ADA, I am in some. I'll always kind of disclose when I am. But basically, if you zoom out, you get that little bad tick that messes thing up. But you get this nice long support at pretty much $1. And what I noticed, you can see the note that I have for the Stats Edge Pro memberships, which again links to TrendSpider and Trade Ideas, which are the tools you're going to see me use for charting and analysis and scanning, in description below. That also takes you to my website. Full disclosure, I always like to say, they're affiliate links. So if you buy either of those using those links, they pay me a commission. I just want to tell people that's what it is. But these are the tools I use anyway. Right? My philosophy, I think, is the same as a lot of people, where I wouldn't recommend something that I wouldn't use myself. I think that's just kind of the honest way to do it. But on ADA, when I saw we were kind of coming down here and we were holding this 120 area, and we put in this descending triangle look, right? We're making lower highs and then we're making equal lows. When we broke out of that, I picked some up. I'm about even on it because it popped up and then it came down. I'll get out under this level and then maybe look to see what happens at those lows. But that's the way I'm playing ADA, Cardano. Again, I am not an expert on these coins. I kind of take a look at them to see what's going on, but I trade them like anything. AXS, I'm watching this axis just to see, right? Well-defined support level right here, holding above these prior highs. And the reason I think these prior highs are important, because if you remember Bitcoin, it was hanging out under those prior highs from earlier in the year. I'm looking at cryptos that are holding above those, just to show that when everyone started selling Bitcoin and Ethereum, that they didn't start selling these other coins as much. as someone who likes trading relative strength, it's something that makes sense to me. I'm in some of this bat. I've talked about this earlier. I don't really think there's anything too interesting about this right now. Maybe if it gets over 145 here. Same play, right? Here's that prior high. We pulled back into it. A lot of support in through here. So as it bounced off, I picked some up. I'm up a little bit on this, but not too much with that. Just trading them, right? I'm not, for people, I guess, who don't know, I am a chartered market technician. I should really find a way to put that in frame somewhere. So I'm a quantitative trader and a technical trader. So that means I use statistics, right? That's why it's called stats edge trading. I come up with scans, I back test them, I try to find a little bit of edge in the market. And then on top of that edge, I apply my own trading eye and I say, okay, I have this edge that I found somehow through testing something. And now let me apply what I've learned taking my CMT and then also being a trader for many years and just staring at charts and try to see if I can filter that edge through my trading eye and then come up with an idea or a synopsis of why I'm going to do stuff. So Engine Coin right here, I initially got involved in this one here, got a nice little pop out of it, stopped out the rest break even. And then this same look that you can see on ADA, same idea too, right? We've got this prior high here, and that is turning into support here so far. So I picked some up as it broke this ascending triangle, sold a little bit of it as it reversed in through here. And then I actually today picked up a little bit more, just added back in what I sold out there as well. And that one so far is looking good. Worst case stop, I'm not going to let it go under here. I'll probably see what it does if ever breaks this area. That's just the way I look at it. They're trades, they're not, I'm not committed to any of these things, right? It's the old saying, date them, don't marry them. So I just go, this is a list I go through every night. Basically what I did within TrendSpider, man. Still possibly recovering from New Year's Eve hangover. As you get older, those things get harder and harder. I didn't get this one, but I know I'm going to regret this helium. Same, the patterns in these cryptos remain the same. You have these prior highs, break out, pull back into them, see if they hold, buy them if they bounce off that level. And I just couldn't get access to this one in Kraken that I use. So that's what I've done. This list, just FYI, isn't going to be every crypto out there. But what I did is I found all of the things that I could trade within Kraken, which is just who I use as my crypto exchange. And I just imported them into TrendSpider so I can see this one as well. So that's good, Ray. So Ray's saying that he got in this keep. We were talking about this one for a while. So I should probably take this off the watch. Oh, it is off the watch list. So HNT, I'm actually going to update to 40. And then this I'm actually going to watch to 2 or to 3. But yeah, so we were watching this keep. If it got over 0.7, I got involved in some of this as well. Wrong, I'm just going to use this last swing low, right? Wrong if we're under that level. And that was your first crypto trade. So far, so good, but right, trade it like anything, There's nothing different about these than stocks, which is why I'm now recommending that everybody try to trade crypto. Put $100 in it, put $50 in it, and play from there, right? On a declining wedge, you want to get out into the prior high. You want to get to the prior high. I would love if any of these would get to the prior high, right? 70 cents to $1 is like what, a 35% gain. That would be a nice little trade, but I'm more of a sell in pieces on the way up. This is kind of what I learned from Brian Shannon, who's a personal kind of mentor of mine, and also Trading in the Zone by Mark Douglas, which is a great trading book. He always, one of his trading tenets was take something like, pay yourself when the market makes it available. So what I generally do is I split my trades into, I'm all in. I never average in. I find that can kind of get dangerous, but I will average out. So on Keep, for example, if we get into the 80s, I'll probably take maybe a third of my profit. And then if we get into, the 90s or near a dollar, I'll probably take another third. And then I trail my last bit as what another mentor of mine from Great Stock Picks always just said, an accidental home run, right? So sometimes you can, if you scale out as you go, but then you keep part of it for some sort of trailing method. A trend line break, if it breaks trend and starts to come down, a moving average break, a break of a bullish base, right? Maybe it goes up and then it bases for a while and you put your stop above that, something like that. But you want to give some ability for a trade to breathe, right? Because if you want to take some of I always describe it like this: you've got a devil and an angel on your shoulders every time you place a trade, right? And one of them is saying, hey, look, you're up money, get out, right? Get out and take your money. And then you've got the other one saying, oh, if you hold this one, maybe it will go forever and you'll get like a wicked trade, and this will be the trade that makes your year or your month or whatever. And the only way that I have found, and there may be other ways, to shut up both of them is that selling in parts, right? So you go, okay, fictional numbers, right? You guys know I don't like to talk about hard numbers because I don't think hard numbers are super relevant, right? It's all about the size of your account. But let's use LPT, which I've just added to the watch list for Stats Edge Pro, if we can kind of get going around this 45 to 47 area. So say I buy at 45 and my stop's at 35. So I'm risking 10 points. So I say I want to risk $1,000 on that trade, just because you guys can tell the sun's already going down in Canada, and still working on that hangover from New Year's. So you risk $1,000. So I would take 100 coins for a 10-point move to risk $1,000. As soon as I see myself up around $1,000 on it, you take 30 coins or 40 coins or 50 coins or whatever is comfortable for you and is obviously part of your trading plan, and you take some of those off the table. You sell it, you lock in, say, $300, $400, $500, and you raise up your stop. You say, okay, worst case scenario, if this thing turns around and hit my stop, I've put a few $100 in my pocket, I've paid for the light bill for this month or whatever, it was a good trade. It's not going to be the most mathematically optimal thing to do, but it will give you some peace of mind. You're like, okay, good trade. Now I can kind of take a deep breath. I'm not going to lose on this thing now, barring some sort of, event where it slams down or goes to zero or something, which is just the risk we take. But I've locked that in, and I find it allows you to be a little bit more rational when it comes to your trading, where you can now look at it and you've taken that off the table, you've reduced your risk or eliminate your risk, and now you can think a little bit clearer. And then say from there it goes to somewhere in this 70, 80 area where it's got some resistance. So now I lock in another $300-$400. So now I'm up $700 that I've taken and it's in my pocket on the trade, and I still have an unrealized gain of $500 or something, just making up numbers at this point. Now I can trail the rest of that, knowing that regardless of what happens, I've made more than what I was risking, right? Ideally, if I was risking 1,000, I've made 2,000 already locked in my pocket, and I have a break even stop, right? And now I can kind of say, okay, now let's look for when trend breaks. So for example, if you got in this move here, right, you may say something like, okay, well, a trend is highs, right? Higher highs, and then we had this pullback here, and then we had a bounce, and then that bounce failed. So maybe you cut out your last bit here. And instead of just, you bought down here for whatever reason, you sold a little bit here, you sold a little bit here, and now you've got a little bit from the back half. And what you're hoping is that maybe once a month or once every few months, you get one that just goes and goes and goes and goes. And you've very you've calculated your risk to make sure that you're making a little bit more than you risk on every trade. And then you've just set it aside. So you're like, okay, well, but now I've really got one that's really, really going for me. Right. And I can kind of put that, and I forget who said it like this, but I've heard it described as your salary and your bonus, right? So your salary, you want to make sure is multiple times your risk, right? So you're always making more than your risk. If there is a holy grail of trading, it's risk management. It's making sure that when you lose, 1 to 2% of the value of your account, and that's it. You're not, swing for the fences. You're not risking 10 or 20 or 30% of your account or anything crazy like that. And that when you're right, so say you're risking 1% of the value of your account, you're making 2% of the value of your account. That's as best of the holy grail as I can say that there is within trading. And then this last little bit that you leave on is just your bonus, right? So your salary is hopefully, right, you're risking maybe $1,000 to make $2,000. And say you've got a 50-50 win rate, which with those numbers is fantastic, right? You're risking 1,000 to make two, and you make, 10 or 15 trades a month. 50-50, you've made 20,000 and you've lost 10,000. So you're up 10,000 for the month. And then you hope is that once a month, maybe you get one that runs another, 20, 30%. And you go, okay, well, that's, a huge, that's my bonus, I guess, for that particular time. So I hope that makes sense. Again, it's not, if we want to talk pure, like, mathematical type of trading, you're probably better off to buy in one and come up with some trailing metric for the way out. That's probably, like, if you sat and crunched the numbers, it's probably the best way to do it. And if you can do that, that's probably the best way to do it. For me, I'm just trying to figure out how to balance those things of how do I make sure that when I'm right, I have the chance to make a lot of profit, and then when I'm wrong, things get cut quickly, and my account grows slowly or stays break even for most of the time, and then every now and then you hit one out of the park, and that's where your next big growth is. So before we get off crypto, because I think I've done all the cryptos that I'm interested in, let's go back to NGen. Right, so I talked about how I traded this so far over the last few days, right? I took the break as it occurs here. I sold, I don't have the exact numbers, but let's say a third off, right? And then as it came back, I bought that third back. So if we come back and stop me out, I will take what my original risk was minus that profit that I made, which will make it, a little bit under a break even. But if we rally back up to here and it looks like we're going to have some struggles, I'll take some off the table. And another great example of that this year was Atom, that we got to get, click on this one. Problem is it hits different exchanges. So this Atom back here, and old members will know this, I was playing off this prior high. So I took some in through here, right, on this low. And when it bounced, I took some off. And when it came back, I bought it back. And then it bounced a bit and I took some off. And then it came back and I bought it back. And then I got stopped out. But because I did those little sales as it went, that stop out, I think I made a little bit of money or broke even, right? It wasn't obviously a great trade, but I did okay just because of this kind of selling stuff. Whoops, as they go. Switch that back. Sorry, I'm just trying to keep things organized as I go here. So that is crypto. Let's grab those and pop them in there. And now we're going to go into the equity markets. So for you non-crypto guys, this is where things will get more interesting to you. So I have 4 major indexes that I watch. So for those, we're going to go month, week, day, just to see what's going on there. And the first one is the old SPY, the thing that everyone watches. And I'll tell you why I do some of these. So here's a monthly chart on the SPY. There's really nothing to say other than this is bullish, right? Anyone who told you that this, this is extended or wait for the crash, right? Everyone to say other than bullish, right? New all-time highs is not bearish. And we got new all-time highs after new all-time highs after new all-time highs. I think this kind of step back and look is very important to do every now and then. Some do it once a month. I usually look at monthly charts once a quarter. But I think it's important because it makes you really evaluate every downtick that happened. And I don't know if you guys are on Twitter and FinTwit as much as I am, but man, every time we got a downtick, it was the end of the world, right? And some of those downticks you can't even see here. And I know people personally that were saying, oh, this is it. Everything's tanking from here. Here's the end, right? I'm just going to make sure I have the Twitter open in case anyone's tweeting at me. But yeah, this is the end. This is crazy. This market has to pull back at some point. And they were all wrong because we hit highs after highs after highs after highs. And that's really kind of all there is to it, right? When you look at the long-term chart like that. Perspective, right? Forest for the trees. Now, on a weekly chart, it's very interesting, this base that we're putting in here. And I think this is what we have to watch for the next few weeks to come. Is this kind of, we broke up and now we're chopping sideways. We closed outside of that base. However, right, we could sell back through. So I'm just going to do an arrow. This is why I really like, let's just do dip A. Is that it? No, not that one. God. Oh. A comment, LOL facts. The new streaming service I'm working at, I'll actually be able to bring in comments like that and they'll like appear around me somehow. So I'll do, but there was so many, right? Every time the market would downtick 4 or 5%, all of the bears would come out and go, oh, I told you so. And then we make new highs and they all shut up again. So the way I look at this is it's just a simple uptrend, right? Got it. Right, so we have highs and lower highs, right? Right, so this is as a classic, and that will be my note here, classic uptrend. So a lot of people say, okay, you always make fun of the people who are bearish all year. When are you going to turn? When are you going to turn bearish on this? And I'll turn bearish, at least turn cautious when the trend reverses. And we haven't seen that all year. We've just seen higher lows and higher lows and higher lows and higher lows. So for example, right? That low end of the weekly chart that I pointed out is right here at 450. So in my eyes, as long as we're trading above 450, we're in a bullish trend. And as soon as we break and hold under 450, now is when it's time to kind of go, okay, right? Right? It's now we need to start being concerned. But since we are traders and we trade trends, we just need to be a little careful as long as these are going through. So Timothy asks, is this charting service available somewhere? I have trade ideas. So this is TrendSpider. So for me, I use TrendSpider for the annotations, the drawing tools, and the fact that Trade Ideas doesn't have crypto or FX, and I trade crypto and FX. New streaming service, Be Live. No, it's something called Encam, yeah, Encam. And the reason I was looking at it is because it's optimized for, right now I'm using OBS, a little bit of nerd talk. We'll get back into markets in a second. But right now I'm using OBS and I have all of the new Apple Silicon stuff. So this is not built for this chip. So it's not supposed to be as good. This Ecamm Live is supposed to be built for M1 Max. So I can run like 4K streams and I can do a lot of cooler stuff. I tried it, but when I hit live, it opened up another stream, not the one I'd scheduled. So I have to figure out that. But I'm planning on doing way more streaming into the New Year's if you guys like it. So I just want to pay. It's like $20 a month, but that'll be worth it if possible. But yeah, so this is TrendSpider again. Link below for both of them. Trade Ideas is by far superior when it comes to scanning. When it comes to the auto trading features that I use, all of that. TrendSpider is focused on charting and technical analysis, so I use it a lot for that. Trade Ideas is going to move a little bit more in that direction. I hear we have a guy who's just going to be focused on that going forward. So that will be fantastic. If true, we'll get, these, I like these shaded areas that we don't have in Trade Ideas because I don't like horizontal support and resistance lines. I don't think they make sense. I like to draw these. So anytime you see these shaded areas on my chart, these are my support and resistance levels, right? And it's an old trader adage. You draw your support and resistance with a crayon, not a pencil. And it's because they're just never exact areas. They're just somewhere in the vicinity of kind of thing. So let's go to monthly. So this is MDY. So what we're doing, or no, sorry, not that yet. We'll go RSP. So for those who haven't heard this rant, for those who have, I'm sorry. But RSP is essentially an equal weighted version of the SPY. So where the SPY is cap weighted, so it means bigger cap companies will have more of an effect of the SPY. The RSP, every company has an equal effect on the SPY. Why I watch the two of them is I'm looking for divergences, right? So if the SPY is going up and the RSP is staying even or even going down, then that tells me that the largest companies are driving the move. Right here on the RSP, we can tell that that's not happening, right? Because the RSP is making new highs as well. So RSP same as SPY, right? And I don't need to go weekly and daily for this because they kind of look the same. But again, it just shows me that anyone who says, oh, this rally's being generated by the big FANG names or something. Well, this proves that's incorrect, right? If it was, then the equal weight index wouldn't be performing the same as the cap weighted index. Hope that makes sense. There's like one guy out there that goes, oh, that makes sense to me. And the rest of you are like, man, that was a lot of random bullshit. I ramble a lot. I apologize for it. But so now we're going, this next ETF is the MDY. So we're going down the cap scale. So what I mean by that is the S&P 500 is big cap names. Your Apple and Google and Amazon, these big Microsoft, big names. MDY, and I think large cap is classified as 10 billion market cap plus. MDY is 2 billion to 10 billion. So not your big cap guys, but kind of your middle of the road guys. So again, I just want to see where the strength is, where the weakness is, what to watch for. And MDY, the only note I have to say is just mid caps weaker than large caps. And why I do this, even though I trade each stock based off the merit of the stock, is I just want to know what environment I'm in. I want to make sure that I'm trading with the overall trend of the markets, right? So, right, so this one we can just kind of highlight this and just go range bound year. Let's move. How do I? Bottom right. Let's go top left. There we go. Right. So the whole year. This is May. So I guess February there was a bit of a move, but it's been range bound all year, which again always I think it's hilarious for this market's overextended. It needs to correct. Blah blah blah. It's been correcting. It's done nothing for the year. So, and then I have this note that we're just in the middle of a range because we are about in the exact middle of this range. So when it comes to this, we can already put a bit of a puzzle together in our head. We can say, okay, the big names, the ones that have a lot of revenue and are real giant companies, they're doing great. The middle caps, and these are the ones who are, generally speaking, they're smaller companies, but they're probably on their way or attempting to be bigger companies. They're doing okay, but they're not doing as well as the mid caps. And then we'll go into the last ETF. We'll go into the IWM. And the IWM is your small cap names. So these are under $2 billion companies. So small companies. And you can see this has been in a range all year and not even near the high of that range, right? If we go weekly, you can see, right? And then I think my comment is just going to be, can I do that? Yeah, I think my comment is just going to be a sleepy emoji, and that will be it, right? Because it's just, we're smack in the middle of the range. We've been in the middle of the range all year. And this is why for a lot of people, the market hasn't looked that strong, right? Where, a lot of people, and I think this is where the frustration of this market is coming for a lot of traders, is they see the SPY hitting highs all year, and then they see their portfolio hitting lows all year. And that's because a lot of us traders gravitate towards these larger cap or the smaller cap names because they have the most potential of growth. But in this case, not so much, right? And then if we go into the daily chart, you can see relative to the MDY, we can just, I guess, just put a little line here. And then my comment's going to just go weakest of the bunch. You guys starting to see the benefit of Stats Edge Pro if you like this analysis. You don't have to hear me ramble on for the whole hour about it. But yeah, so pay attention to this high right here, and then we'll go into MDY, which is our mid caps, right? And that would probably line up with that high. So we're higher than that. So the mid caps did better. And then if we go into the SPY, which is hitting new all-time highs, right? And we compare that to kind of this high right here, they're doing even better still. So the higher you go up on the cap table, the stronger things are. And that kind of goes to the synopsis of why I do all of this analysis before even looking at stocks. And I do this every night. It's because I now know that of the strongest things that are out there, it is the large caps, which are the strongest. So bigger names, Apples and Teslas and things like this, generally speaking, have been doing better than the smaller cap names. And right, we need to make sure that we are leaning there accordingly. So now I'm going to go into, this is Koifin, not affiliated with these guys. But if anyone from Koifin's watching, I love your service. I want to get more into it this year. Let's actually go and do this, get my face out of the way, and we're do this 1 year. So what this is a breakdown of all of the different sectors within the S&P 500 compared to each other. And I like to look at this because I want to know, okay, what's doing good and what's doing poorly. So you can see that XLE, energy, real estate, and financials have been doing the best of all of these names, right? So if I open up this guy and I'll bring this one in. Oop, didn't mean to do that. Get rid of you. And I just want to highlight these. And I just want to say boring names had a great year. Right, same thing we've noticed when we were looking up and down the cap scale, right? Boring names had a great year. Things, energy is boring, real estate's boring, financials are boring. These things did phenomenally, right? Consumer or communications, which is like Facebook and that kind of stuff, didn't do too well. Consumer staples generally doesn't, same with utilities. But a lot of these more high-risk names did way worse than a lot of these low-risk names. So again, we're just painting a picture of what's going on in the market so that we can trade these things accordingly. Move my little Stream Deck thing here over. So what we've learned is this year, all the way to the end of the year, the boring defensive sectors did great, and the risky fun stuff did horrible, is essentially a way to put it. So now what I'm doing is I'm scanning for interesting U.S. bank holiday, but the markets are open tomorrow, right? Interesting. So this is forexfactory.com. Again, no affiliation, but what they do is they color code. So this column right here basically will show you anything that's gray means that the market's closed. Anything that's yellow is a small event. And I'm looking for economic events. I'm looking for large economic events. So there's kind of something. There's a job opening thing on Tuesday. FOMC on Wednesday and non-farm payrolls. That might be interesting. Thursday, we have an ISM. Don't think that really matters. Non-farm unemployment change, unemployment rate. So is this Friday? It's the 7th Friday. Let's open up this. Yeah, 7th Friday. So what I'll do is I'll just make a note. FOMC when big news Friday. And again, this is just so like, I don't do these to trade off of them. What I want to know here is I want to know what to avoid. So for example, if there's a stock that I really like, if there's a stock I kind of like on Tuesday, I may not be as interested in taking it. I may just say, okay, let me wait till Wednesday because there's going to be an FOMC meeting and we'll figure out what happens on Wednesday. And then after that occurs, take it kind of thing. Or if I'm in a couple positions that are, say, break even and don't look the best, well, then it might be prudent to wait for, like if I'm in something and I'm down, it's close to my stop, I may just say, you know what, let me get out of this, wait for the news event to occur, and if I still like it, buy back in, right? Not trading them to, I don't think there's any value in trying to trade off them, but knowing that they're there makes sense to me, right? So that's what we think about the markets. Again, everything is bullish until proven otherwise. Higher up the cap scale you go so far is better. When it comes to things like the IWM, the small caps, I think we really just need to lean off these lows, and we need to understand that small cap names are the weakest of all of the names. So we have to be more careful with names like that than we will be with larger cap names. Now we go into trade ideas, and this is what I use for my scanning. I'm going to do some scanning with a TI strength just to see if there's anything here that is interesting to me. This is also the platform that I use for my trading. I will essentially, they have a module called Brokerage Plus, hooks up to Interactive Brokers or E-Trade, and you can place trades through it. So I can say, hey, I like ES, for example, if it breaks out of this base. And I can go, okay, go, and set that, and then the system will take care of it for me. I don't have to think about it anymore. If it breaks out of that base, it will buy it. And then if it doesn't, it will cancel the order at some point and be done with it. So PPL is interesting. This is also the point, I guess, if you guys have any charts you want me to look at, I can certainly do that for sure. I am going to actually do this, and I'm going to reposition a bit. Oh, sorry. Me, not the screen. I want to reposition me. I want to put me up here just so that you guys can see. One thing I really love about Trade Ideas, and I think it's an underrated thing, is this single stock window. That's just like a data sheet for everything. Excuse me one second. Yeah, so this data sheet down here is essentially, it will show all of the data points that you want, both technical and fundamental and that kind of stuff. So what I look for is, right, what's the float, what's the short percentage, days to cover, things like that. Revenue and stuff I don't really care about, but average shoe range is interesting. And again, you can customize this with whatever you want. Oh, and also, when is earnings? I don't want to trade anything that I think, if I'm going to be in it for a week, I don't want earnings to be within that week. I want to give myself enough time that I think I can buy it, and maybe if there's a run up into earnings, there'll be enough profit, because I will, generally speaking, unless I'm up a lot on a position, I will be out before earnings. I just don't like the binary risk of just holding into earnings, hoping that they report good things and not bad things, and just kind of going from there. So we're just going to do some scanning here. And again, if there's anything you guys want me to look at, I can certainly do that. I got to change that symbol linking to red. And yeah, so this is my scanning platform. It's my trading platform. I have another monitor over here that's actually I think a 34-inch wide vertical monitor. And during the trading day, it's just all charts. There's like 20 charts up here. I've got the markets. I've got the individual names that I am holding. I've got the individual names that are on watch. And I've got it all here. And that's cool stuff that Trade Ideas can do. Trade Ideas is more like a power platform. And then TrendSpider is like a technical analysis platform. So I believe both have a place in my process, not necessarily everybody's process. So what we're doing, we should actually do this first. I want to go back here because I want to take the public watch list and clear it. So these are holdings, this one. So this is the watch list that I had as of Friday. And basically what I want to do is I want to see what I no longer like first, and we'll remove that because I have a cap to my watch list, which is 15 names. Kind of arbitrary, right? Could be 16, could be 14, but my theory is I don't want to have an insane amount of names on it. As soon as I've got just tons and tons and tons of names, then I'm going to be kind of flustered, right? So there's that docs that I was looking at, hasn't triggered yet. So yeah, I'm basically kind of saying, okay, well, what can trigger, what is close to a trigger, and then what is either I was waiting for it to break this and it broke down, or vice versa, right? So I'm just going to remove. So far, all these things I still like, right? Fisker, for example, I'm watching this prior high, and it's kind of basing down here with this bit of a downtrend. So I'm going to see if this can kind of break up through here, right? These are just the things that I have on watch. I think this JPRH, I'm going to take off the list. I am in this one. I just don't think it's a good entry anymore. LAC, I still think that's fine. LNG, I've had this on the list for so long. I have to extend these lines out, but I still like it. It's just a nice, clean, orderly pullback off a really strong stock. But I'm going to change. I'm no longer interested at kind of 110. It'd be like 105, and then I'd be out at like 90. Again, I still like the look of this name. We saw in our analysis how well energy did, and LNG is an energy stock. So I like the look of this, but it's been in this downward channel all year. I kind of want to see a break and a close out of it for me to be involved. And then, right, hopefully it kind of does the bull flag thing that it needs. Am I not going to have anything to take off? Man. Yeah, this TVST, let's get that out of there too. Delete that. So that's it. So man, I'm pretty much already full. AMAT. Let's actually do that in AMAT. Because again, I cheated a bit. I was a bit bored, so I looked at it. I entered a swing at 155.60. So you're up a bit on it. That's good. I see what you're looking at here. This is a good. It's a good name, right? This kind of descending trend line. And broke out of there. So that looks good. It's starting to pull back, right? So I would probably protect your entry. There's nothing that I would trade off this right now, but it's a fine looking, really strong name. You know, what you want to see is you want to see it hold this area kind of in through here. If it breaks down out of that, then it's going to get back into this range and it might turn into a bit of a mess from there. So again, I cheated a bit. So this one I'm going to put on watch, this LWNG. Essentially just looked at this one because it's been pulling back and it's pulled back into this kind of zone in through here. What's this? LWLG. Right, so strong name. Don't know what they do. Lightwear, Logi, no idea. But it's got this zone in through here that you can see was resistance here and here and here and here. And now it's pulled back into it. So I'm looking to see if that's going to bounce off that. So I'm going to watch that for maybe 16 with a stop at like 14. And again, these are always super round numbers because I don't do signal services, right? Again, I don't believe in them. These are just the point of Stats Edge Pro is either a second opinion on the technicals of the markets, or watching how I do my process and how I build my lists and do all of this, just to make sure that you go, okay, well, this is how a process works. Because in my opinion, what's way more important than any individual trade is just the process of trading, right? You know, a trade can come and go, right? You can have one great trade, one losing trade, one great trade. And the traders who have gone past the stage where they're losing a lot of money and they're just breaking even generally are doing it because they don't have a process in place. They don't have I do these steps every night, and then I do these steps to get into a trade, and then I do these steps, right? They don't have that, do this, do this, do this, do this. And as soon as you start to find that process is where I think things really help. So what I do is I show my process, and some people can take from it what they want. A lot of people, I think, that are still with me and have been for a long time, kind of just like they can ask questions, we learn together, we look at markets together, that type of thing. The other one that I cheated, and I'm going to take a look at, is this SGMA. Had this massive move a while ago, and it's just been kind of coming back and holding these prior highs. And that may actually act as resistance there. So I want to see it like over 11, and then you're going to talk like a stop 10. So 11, 10. Again, and a lot of the things you'll find are kind of the same. I've got like 3 or 4 setups which I trade over and over again, which is how it should be. It's nice and boring. It's not exciting at all. Back into here, and we're just going to continue to scan through a bit, not too much longer. And again, if anyone has any charts they want me to look at or anything like that, certainly let me know. Let's go into this J hook scan just to see. These are generally looking for stronger names. So NOG is interesting. I have a couple names I think that are already in the crude area, but I see. TV. Like I'm at my limit right now. So what I'm doing is I'm looking for something that I may like so much better that I'll pull one of the names that are kind of lesser off and put onto this one. But a lot of these are higher short names, so I don't really see much from there. We can go into this one, which uses the TI score, which is essentially just a, like an IBD 30. It's kind of like a, let's look at all of these different, it looks at technical, fundamental, statistical, social filters, and tries to come up with a score to rank each stock. Kind of like how TI Strength does, but this one includes a bunch of fundamental blah to it, right? So Dave & Buster's, for example, has got a 61 out of 100, so not really great. But TMST's got an 88 out of 100, which is much better. And again, I just like to scan through these or sort it by short float, and we can go from there as well. QRVO. It's beaten up, right? Pull back from 200 down to 50. Potential little double bottom coming in here now. So, I can't buy anything that's up like 7 days in a row like this, but it's interesting, right? If it holds that, if you're a longer term kind of person, right? I think you just got to lean against these lows. I don't see anything here though. It's just in the middle of a massive range. It's really nothing to it that's crazy. I heard of ABC pattern, Fibs resistance, and X. Yeah, I don't really use Fibonacci. Right, I get the ABCD. It's just supposed to be a trend. That's all it is. Not really a big Fib guy myself. If it works for your trading plan, great. They're like anything, like any indicator, like any candlestick pattern, like any technical pattern. There's no magic in them. They're just all pieces of your trading plan, right? So that's part of your trading plan. It's working for you, great. I'm much simpler. You can see by my charts and everything, right? I want to find out what indexes are doing well, and I do this kind of top-down analysis, and then I'm a kind of a pattern trader after that. But again, if it works for you, great. It's not my thing. I've never met one that uses like really rigid, like bat patterns and these all harmonic patterns and makes a crap ton of money doing it. So it's just, again, doesn't interest me that much. LY is interesting, right? You've got obvious resistance at 280. So I think that's your number. I think if you're below 280, I don't see anything there. Above 280, maybe you could get going. So, but I think that one's pretty obvious. Might be too obvious, right? If enough people end up looking at it, um, you know, so that harmonic stuff is a door too far, and it's like that's just extensions of this ABCD stuff. I and any of the pro members here just walked away, but like I am just so insanely simple when it comes to my trading. I think the 90% of traders that fail, you take those and you split them into two, right? They either don't have a plan or don't follow a plan. That's half of the reason why they fail, right? They either just don't have a full trading plan that says, I enter stocks that do this and I exit them at this point and I put my stop loss here. They just didn't even bother to write that, in which case they're doomed to failure. Or they don't follow it. They have the plan, they don't follow it, they cancel stops, they move stops, all that stuff. That's half of the reason that people fail. The other half is just insane overcomplication. They're like, I look for a MACD cross and a stochastic this and a blah, 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 and a this and that and the other thing, which kind of leads into they probably don't have a plan. They're probably just chasing some stuff that they found. So I'll never bash anyone who's like, I have a plan that, looks for stocks that go up and then they look for this Fibonacci retracement and they buy it there and then they look for that Fibonacci extension. I think that's fairly simple and you're trading with the trend. So it's probably fine. For me, again, I've got like three major setups that I look for, right? I look for pullbacks, cup and handle kind of patterns, and RSI divergences. And that's about it, right? And then I do this top-down analysis to make sure that I am looking in the right areas for those things to occur. And again, I think other than that, it's just, it's just kind of, don't overcomplicate it, right? Just make it simple. Yeah, you're never going to be right more than 60% of the time. So abandon all hope there. And just know that, okay, if I'm right 60% of the time, but I manage my risk correctly, in the long run, I'll make a bunch of money. Right? So again, I'm a very much a simple to the point of maybe boring. What do I think of regional banks? Well, financials did very well, right? So we noted that all year financials have been doing fantastic. So this is obviously commercial banks are in financials. This one's got a nice kind of pullback going on here after failing at these highs. So right now I don't see much in it. Maybe if it can break above here and hold above that last high, I think that's interesting. It's obviously in an uptrend, so potentially move higher and go from there. I don't know what the hell that is, but I've gotten popular enough for bots, I guess. Let's just hide whatever that thing is. So yeah, it's strong. Financials are strong. I hear a fire alarm going off my house. Probably just cooking, hopefully. Long term is XLRE overvalued, overbought at this point. RSI is high. I don't use the RSI for above means overbought and below means oversold. Again, I don't believe in that. I've seen things get overbought and then double and triple and quadruple. I don't think it matters that much. I am a trend trader, so I'm going to go where the trend is. Now, I wouldn't buy it here just because you're talking like 6-7 days in a row. If it pulls back, maybe. Technically, I guess the RSI isn't overbought at all. But I wouldn't buy it here. But I go for where the strength is. I go for because basically when you have strength, it's what are the institutions buying? And when the market's selling, what are the institutions not selling? That's what generates relative strength, and that's where I want to be. So I wouldn't buy it right here. And plus, this may be a little shooting star kind of pattern, right? A big move up and then a topping tail up there. Looks like we could be getting a bit of maybe a down tick, see what happens at 50 kind of thing. Again, I don't really like to trade the individual indexes, though. I use them as a guide to try to figure out where I should look for stocks, just because I think there's more potential gain in finding the right stock as opposed to the right index, if that makes sense. But again, I don't believe in overbought. I think that's a fallacy, right? Let's look at Bitcoin, for example, and let's go back before this stuff, right? Okay, so Bitcoin got overbought at 12,000, and then it went to 60,000 in a straight line. So 6 times your money after it went overbought. Now, the people that I've seen that have used overbought and oversold conditions successfully have done them as trend following, right? They'll look at an overall trend and they'll say, okay, in this trend, this thing's going higher. I will wait on a shorter term time frame for maybe it to get oversold, and I will use that to initiate a buy in the overall direction of the trend. But it's just not my thing, and I just don't believe, right? So it's like, if you bought Bitcoin at 12,000 when it became overbought, then you were a happy camper, right? If you sold Bitcoin because it was overbought, or ignored Bitcoin because it was overbought back here, you're pissed because you could have 6x'd your money, right? 10 grand into 60 grand kind of thing. So it's just not, I don't believe that to be the case, that that's something that you can kind of do like that, right? Oh, hey, Pamela. I'm here with you. I saw how much plan it would make such a difference. I'm getting set up for success. Oh, thanks for the Stats Edge leadership. Awesome. Right? That's great. I'm glad you guys are enjoying it. And that's actually probably... So, did I close that? That was stupid of me. So again, if you're interested in Stats Edge or anything that I'm doing here, link in the description below takes you to my website. You can find all of the tools here. Those are affiliate links, so they'll kick back a bit. One thing I will ask is if you guys could hit the like button. I hate doing that. It sounds so, hit like and subscribe, blah, blah, blah. But YouTube yells at me all the time. They say, hey, if you want to grow at all, you have to. That's another thing, that new streaming platform will be able to pop something up that will say, hey, man, give me a like, share it with your friends, tell your grandma. So I will do one more call for chart requests. I've got my list done. Again, the 2 things that I add was SGMA. That's what I added today. I just like it as long as it's kind of holding above here. If it starts to move off there, that's great. If we break down, then obviously no trade. Right? LWLG, same kind of thing. It's holding this prior highs. If we start to move off that, great, I'll get involved. If we break down, no trade, right? And I'm very much, and this is why I got into systems tradings a lot, is the way I think of it is trading is kind of if-then statements, right? If LWLG starts to move off this support, then buy and put a stop at the low of the day. If, right, it breaks down and closes under this level, remove from watch list. So that's how my trading plan with these things work. Is now that I've identified this is something that may be interesting, it's just a series of if statements from then on. I don't have to do any more thinking, right? Ford. Let's look at Ford. Looks good. I know I've watched it. It was on the watch list. You can see I kind of looked at it over 2050. It's sitting there now. I think this one's, again, pretty simple. You know, as long as you're above these recent highs, I think you're good. If you start trading back into this range, I'd be like, you know, yeah, or below that range, you're obviously wrong. I think, not a fundamental guy, I just like to shoot the shit about it sometimes. I think Ford's like a sleeper EV play. Right, I think you'd be way easier to get a dude who drove F-150s his entire life into an F-150 Lightning more than you'd be able to get him into a Cybertruck, right? The guy who's my grandfather, when he was still around, he got a Ford Taurus like every 2 years. He would go and get back the lease and get another one. He had Ford Taurus for like 30 years, the guy drove. You're not getting him into a Tesla. But if there was like a Ford Taurus electric vehicle, I think you're going to push people in, that kind of thing like that as well, right? Um, that's kind of the way I look at it. Solana, I think Solana, it's $200 is what you got to watch. Right? I think it's simply the whole story with Solana. Oh, Jesus, I hate that. I wish, maybe there's something I'll email them about. I wish it defaulted to whichever exchange has the most data, like the longest running data. Give me that exchange. But yeah, so I have it on watch here at 200. Basically just watching this key level, right? You can see the arrows that I drew in. I should probably have another one here, like that. Right, so this whole band is important. If we start to break under this low here, I think that's a problem. As if we hold over that and start to push higher, I think it looks great. Could make another leg higher. Again, I don't think any of these are doing this kind of, these big ones, these like 10 to 200 anymore, but maybe you get another leg and it takes a shot at 3. But yeah, I think that zone is what you have to watch on Solana for sure. Using TI on a daily basis, but I want to sign up Stats Edge this year to help me develop specific repeatable process for every trade. That's awesome. Because I love trade ideas. I work with them, like full disclosure, right? I don't hide any of that. You guys have probably seen me on live stream and stuff like that. I've used them for 15 years before I worked with them. So it's definitely not, I talk about them because they hired me. It's they hired me because I talk about them, right? So I've used them ever since then, but it's a tool, right? It's a shovel. It's a pickaxe. It's a tool to help you save time in your process and to be a better trader, right? It will not make you a good trader, right? But it is a tool. Same with TrendSpider right here. These are tools that will hopefully help make you better traders. So I think it's, that's the way to look at it is, how can I use these tools to create a trading plan? Geez, I just noticed how friggin', I gotta stretch more. How lopsided I am here. But or is the camera lopsided? No, that's me. But yeah, so right, it's that way. It's not the other way around. You give me the world's best hammer and you still won't trust me to build anything because I just can't. It's just, I'm not that kind of handy type person, right? But I'm going to make sure that if I was a plumber, I would have the world's best tool, right? Just because it's a reason I've got thousands of dollars of technology here, right? Is because I want to make sure I'm doing everything as efficiently as possible. It's the reason I have TrendSpider and trade ideas and all these different tools is because I want to use the best ones possible, but only to make my trading plan make sense, kind of thing, right? So, yeah, I had an F-150 for 35 years, has 300. So yeah, so Timothy, you would probably be way better if someone's like, you have to, like, gun to your head, you have to get an EV. You would probably go with a Ford EV over like a Tesla or a Rivian or something like that. So that's why I think some of these legacy guys aren't going to get kicked as much as they can, as long as they don't screw it up, like with the charging and that kind of stuff. They got to come up with some sort of universal system for charging and all of that. But I just think the people who are like, well, Rivian's going to come out of nowhere and dethrone all of these guys. No, they may be competition, and competition in a marketplace is always a good thing. But I just think a lot of these legacy guys are going to do just fine. If they hire the right talent and they hire some new blood and some young kids that say, listen, expand this out in a way that makes sense. Let's put all of our weight and our money and our experience behind it. I think they'll just be fine, to be honest. I trade mostly BTC XAU. Isn't that like gold? Yeah, XAU, yeah. Yeah, trading's trade. I also think oil's far from done. Oh yeah, this transition, like, oil will, like, we're going green energy. It's going to happen. but it's not going to happen tomorrow, right? It might take 20, 30 years, right? The hydrogen technology, nuclear technology, solar, wind, we're going to slowly start to get off these oil and into these nuclear or other types of thing. But I don't think it's going to happen tomorrow. I think probably the buy of a decade was when oil went negative that day. But anyway, that's all fundamental stuff. I don't care about that. I just want to, it's fun to talk about, but I don't really care too much about that. But all right, guys, I am going to call it there. Again, if you can leave a like on the way out, that'd be fantastic. For the Stats Edge Pro members, I took all those screenshots as I was working, so I'm just going to combine them all up into the watch list. I will ping you on Discord when that's done. Within the next half hour, that will all be done, and I'll ping you guys on that. For everyone else, trade safe going into next week. We saw that there was big news on Wednesday and Friday. Monday, it seems like it's a bank holiday, even though the markets are open, which is weird. So just know that it's probably going to be lighter volume on Monday, Tuesday, and then big volume Wednesday, Thursday, Friday. So if you guys are still nursing a hangover from the weekend, that's fine. It doesn't seem like you're going to miss too much on Monday, Tuesday. I'll be doing the same. Any day that's slow, I spend the day building scans and just thinking, right, sitting outside because there's no snow out there, and just thinking of new ideas, things like that. Don't push it into Monday, Tuesday. It seems like the end of the week is when things are going to pick up. So again, thank you all. Left a like and all that. I see there's as many likes as people here, which is amazing. So again, thank you all, and trade safe.